Stick with me for 5 minutes. I guarantee you better results after this video. So I had a brainwave the other day. I thought to myself, what does this audience love? And I'll tell you what you guys love. You love trading. The problem is none of you have enough time. You want to learn how to be great traders, but you don't have enough time or enough patience to sit watching ICT videos for hours and hours and hours. Well, I've got the solution for you. Today, I'm going to teach you my entire liquidity strategy in just 5 minutes. I promise you by the end of this video, you will be a more competent trader, and this is better than half of those fucking paid for mentorships that you see out there on Instagram. Stick with me for 5 minutes. I guarantee you better results after this video. The first thing we're going to have a look at is the daily time frame. The daily time frame gives us a clear understanding of where the market is going to head. 60 to 65% of the time, the previous day's candle will determine what the next day's candle is. That's why you get big runs in price like this, where you have bearish candle, bearish candle, bearish candle, bearish candle. So all I want you to do is to have a look at the price and just see what the previous day was doing. If the previous day was bearish, then the likelihood is the next day is going to be bearish. From there, you're going to drop down to your 4 hour time frame, and then you're going to determine where the current range is. So very simply, you're going to take the high to the low, draw out that range, and that's going to give you your trading range. This is the range that you're going to be looking for entries within. Okay. Now, the 4 hour momentum is a really powerful momentum. It ties up really nicely with the daily time frame. If your previous day is bearish, the likelihood is that you're going to be in a bearish 4 hour range as well. But the key to this is making sure that these two at least line up. If you have your daily lined up with your 4 hour, half the battle is already won. From here, I want you to have a look at the 15-minute time frame. 96% of traders never get funded, and if you failed before, it's not your fault. Prop firm challenges unfortunately look fantastic and sometimes very easy, but are actually more set up to make you lose. That's how prop firms make their money, remember. But what if I told you that we had a system that flips those odds in your favor? Retail traders chase patterns, funded traders follow liquidity, and that's the difference. If you're over trading, relying on random indicators or risking too much, sound familiar? You're making it harder than it needs to be. One clear method, step-by-step guidance, and a proven approach that helps traders get funded fast. We've already secured over 1.2 million in funding using this method without gambling, guessing, or wasting years trying to figure it out. Luckily for you, I'm the one who wasted those years. I spent 6 years trying to find profitability, and now after 10 years of trading and quitting my day job, I put together the prop firm blueprint to help you do the same. If you want in, we're currently opening up a few spots in our early bird mentorship. Now, we don't officially go live until the 1st of April, but everybody who joins us before the 1st of April will get access to a 25,000 challenge account when they complete the mentorship. We are that confident that we will get you funded. And if you don't, if you follow everything we teach you and you do not get funded at the end of it, we will give you your money back. Now, spots are limited, so this isn't one to wait on. Tap below and start your journey with us today. And on the 15-minute time frame, you're just going to draw out any significant highs that you can see. Just draw lines above them like this and then drag them out to the left. Okay, these are your liquidity points. Now, a lot of people focus too much on liquidity points and they're like, oh, which liquidity point do I need to trade off? It doesn't fucking matter, okay? People are too precious about liquidity points themselves. It doesn't matter which liquidity point your trade reacts from. What fucking matters is the reaction. Okay, little rhyme for you. Doesn't matter which liquidity point it reacts from. What matters is the reaction. Like it? This is our section of price. We're going to draw out all the significant liquidity points that we can see, and then we're just going to wait for a reaction from one of them. So let's play out price. Okay, so we've had a reaction from this. Now, the reaction itself is really, really important. This is where I drop down to my 5-minute time frame. I want to see price clearly moving away from this liquidity point. If price is clearly moving away from this liquidity point, it's going to change structure on the 5-minute time frame. It's going to give us a clear change in structure. Now, again, another thing that so many traders get wrong. This is not a clear change in structure. This is what we call in the industry a false breaker structure. And what's more likely to happen in this scenario is price is more likely to be buying back up. Okay, now that in itself is an entry, okay, but that's for another video altogether. We have to wait for the second breaker structure to confirm the move. That is now a confirmed bearish shift. You SMC traders think one change of character or one break of structure is enough to get you into a trade. It is not. Okay, trust me, I've learned the hard way. I was an SMC trader for 2 years and I was incredibly unprofitable. Let's just put it that way. The reason why there's 1,000,001 SMC courses is because they don't work. Good educational liquidity is hard to come by. Think about that. Why? Because people don't want to sell it because it fucking works. So we're waiting for a shift. Okay, let's have a quick look. So we've had first break of structure here. Let's mark that on as our first break of structure. And then we've had our second, or what we call our true break of structure. Now we just need a manipulation. We need an internal manipulation. So the same thing again, guys. We're looking for an internal manipulation. Let's mark these on as red. We're looking for an internal manipulation. And if we can get an internal manipulation, we can then look for a trade. Okay, perfect. So look at how many steps we've gone to confirm this entry. We've had daily, 4 hour, 15 minute, 5 minute shift. Now we're going to jump down to an even lower time frame. So we need a shift on this time frame now. Okay, remember the first break is not enough. The first break is not enough. We need the second break, because what normally happens is, as we can see, prices created the trap. That first break of structure, we normally have a trap. Okay, let's have a quick look now. Let's see if we can get a confirmed entry. So we've got a confirmed entry here now. All we're waiting for is for price to give us. So prices pulled back bullish. This is our true break of structure. Okay, we confirmed that we've got a true break of structure, but prices pulled back bullish. So many people now would be entering here, okay, and then getting stopped out, of course. If price pulls back bullish, we need to wait for it to correct. Okay, now we've corrected. Okay, we can get into this trade like this, stop above the high. First profit target will be down there. Let's see if we get it, and then boom. Okay, news helps us out nicely to get into there. So these are the exact 5 steps that I take every single time that I trade. You can see that it is a highly profitable setup because there's so many moving parts. That is an entire liquidity strategy in just 5 minutes. If you learned something today, do me a massive favor, hit that like button, subscribe to the channel, and I'll catch you in the next video. Cheers.